It is a pleasure to get to talk to you today. We are talking about how Canada can be more globally competitive, and I know that this is something that you have been focusing on, well, probably your entire time. Yeah, exactly. Okay, so, but because today is today, cannabis legalization, I do have to start there. I know that the focus for the government is to get rid of the black market, but economically, what's the opportunity here for Canada when it comes to cannabis?
Well, first of all, I have a clear-eyed view of this because I haven't actually myself had anything to do with the utilization of cannabis.
You don't want to reduce productivity?
You know, no. My wife asked me this morning when we woke up, are we going to change our habits in any way? And we decided that we were going to stay on the same path of having a glass of wine each night. You know, obviously we had no decisions around this had anything to do with building the business or the economy. That was not the driving force. Mm-hmm. It was very much about making sure that we dealt with the fact that, you know, a very significant number of Canadians were already consuming cannabis, and they were consuming it by buying it from effectively the criminal sector, meaning that there's a black market. So as a result of that, of course, we're going to take what is a $5 to $10 billion annual spend and move it into the private sector, which will have positive economic benefits, and you're seeing that in the markets. But that's really not been the driver.
Canada being, though, a leader in this, for sure. We're seeing a CEO of a California cannabis company posted an ad in the Wall Street Journal saying that the president there needs to catch up to Canada. So in a way, do we feel like the leaders here?
Really not the key driver.
No.
So as we think about industries that we're focused on, we look at it, you know, as sectoral strategy, and there's nobody in our finance department. I see some people here from our team who's thinking about, you know, how do we specifically go at this industry sector. It'll be successful, I imagine, with good high quality firms, but that's not the driver.
Another big focus this year has been on the potential impact of the corporate tax cuts in the United States on Canadian competitiveness. I want to know how do you see Canada responding to that in a way that keeps the country competitive?
I think that in responding to that question, it's always important to start with the frame. The question really, the underlying part of that question is Canada as competitive as it should be? And so I start with the frame of how we're doing right now. The economy in Canada is doing very well. We're doing very, very well against any historical standards. We're doing very well internationally. Our growth rates have been strong. We last year grew at the fastest pace among G7 countries. Our unemployment rates are among the lowest they've been in 40 years. So those dynamics are very positive. We're seeing wage growth. We've actually seen, although we had significant decline in investment in Canada around the change in the oil price in 2015, 2016, we've seen over the last year and a half an increase in business investment. But that's the backdrop for a level of anxiety, and the anxiety is around a number of things. Obviously, U.S. tax changes is one of the issues. But when I go out and talk to business people, the anxiety really is broadly has been about trade. There's anxiety about the possibility for the next investment decision based on the differential between U.S. and Canada taxes for some small subset of business investors. And then, of course, there's a sense of concern in, for example, the oil and gas sector around access to markets. So it's different for different sectors. The issue around taxes is very clearly, from our standpoint, something we're looking at based on those investors that have the opportunity to potentially invest in the U.S. or in Canada, and whether the changes in those tax rates is going to drive a decision that means we won't get the good investments, the good jobs here. Our goal is to make sure that that's not the case, that we deal with that differential, and that means looking carefully at what those changes are to enable people, whether they're people in this room or across Canada, to make sure their investment decision is about the fundamentals of their business opportunity here and not about a tax rate differential.
And how do you plan to look at that, to address that? We had the Senate Banking Committee released a report just yesterday calling for a royal commission on taxation, but along with immediate corporate tax cuts now to ease the competitiveness concerns in the short term, but sort of a long-term look with the Royal Commission. Are those sorts of things that you would be considering?
We've taken a look at what the United States has done and broken it down into the issues that have a direct impact in particular on Canadian investment. So I think many people in this room and watching will be familiar with the changes in tax rates. The changes in tax rates, while significant, do not put us in a significantly different position than the United States. They're just comparatively different. So the US, with their changes, when you add up their federal and their state taxes, end up at about 26% as a tax rate. Whereas in Canada, we're at about 27% when you add federal and provincial. So we're largely in the same zone. In fact, the US has come down following what many other countries have already done. So if you look across OECD countries, you see that the US has really been one of the last countries to lower its corporate tax rates. The other issues, though, that are maybe more consequential are the issues around new investments. So in the case of new investments in the United States, they've accelerated the opportunity for people to expense an investment. So that creates an unequal playing field for, if you're a manufacturer with an opportunity in Montreal and Montana, obviously now you have if you're making a new investment, you can accelerate that depreciation more rapidly in the United States. Of course, many Canadian businesses aren't in that situation. But for those ones, we need to look at it. And then,
so you see opportunity there potentially?
Those are issues that we're looking at really carefully. Yeah. But there are other factors on the other side. So the United States changed the ability of businesses to fully deduct interest expenses. So that has ramifications for businesses to think about where they might place their debt. So that has the potential for American businesses to move their debt to places where they can have higher levels of interest deductibility. So I guess the point is that it's complex, that we need to think about what we're trying to achieve and think about how we get there. What we're trying to achieve is to make sure that Canadian businesses have the opportunity to invest in a way that is competitive with their potential investments in the United States.
Do you have a sense of when we will know how you want to achieve that?
I have a really good sense.
Yeah?
Yeah.
Can you give us a sense?
Yeah. We've been talking about this for a while. Mm-hmm. We've been out talking to Canadian businesses across the country. And I think we've been pretty clear that we're looking towards the time period of the fall to be thinking about how we address some of these issues. And so we're in the fall.
We're in the fall.
Yeah, so there you go.
So soon. Perhaps the fall economic update?
The fall would be a good time.
Right, okay,
yeah.
Okay. So you mentioned trade. There has been a lot of uncertainty around trade, but now we seem to see that we have our biggest trading partner back on our team. We have the USMCA deal in front of us. But I'm curious if it's taken away, perhaps, I'm not sure, taken away some urgency for companies in Canada to think outside of the United States, to export outside. If getting that deal, took something away there, perhaps. Not to say that we didn't want that to happen, that Canada didn't want that to happen, but how do you get companies thinking and really pursuing opportunities outside of the United States?
I think you're right. There's a risk that Canadian businesses will be just focused on the U.S. market opportunities. Our goal is to try and deal with that risk. So I think stepping back, as we think about our agenda moving forward, we're thinking about what's happened over the course of the last generation. Canada is in a good position. I think you've heard from other of my colleagues that our position in terms of our trading opportunities are significant because of our trade deals around the world. So we are the only G7 country with a trade deal with every other G7 country. We have more than 1 billion worldwide potential customers. But our trade growth has been pretty anemic over the last generation. So our challenge is to think about how we encourage and enable Canadian businesses to do more trade in the context of a globe that is potentially going in the opposite direction. I think it'd be worth giving people an insight into what's going on internationally. I came back just this weekend from meetings last week in Tokyo, and then with the IMF and World Bank and G20 finance ministers in Indonesia. And the trade tension around the world is real. What I saw in Tokyo with a number of leading Japanese business executives is the same sense of anxiety we saw from Canadian business executives around renewing their trade deal with the United States. So they're experiencing the same thing we've experienced at the IMF World Bank meetings. The tension around US-China trade is pretty clear. So we're going to have to try and expand trade, diversify trade for Canadian exporters in the context of that situation. So we're swimming against the tide to a certain extent, but I think we have the opportunity to do so because those tensions will be, I hope, sorted out. We can encourage people to diversify as that's going on.
How does the Canada-China trade relationship look to you going forward? There's some concerns that might be, there might be a chill because of the clause in the USMCA deal that requires Canada to talk about its trade intentions with the US and Mexico before pursuing it. What's your sense of the trade relationship future that there could be for Canada and China?
Well, two things. First of all, addressing this issue that people are worried that the USMCA creates any sort of new barrier. Clearly, we would always have been in a situation where we would talk about our trading intentions with our largest trading partners. So there's really nothing new in that context, and the US doesn't have any changed ability to go out of the USMCA versus what they were able to do under NAFTA. So the actual facts of the situation aren't different. What from my perspective I see is that the opportunity with China continues to be significant. We talk about free trade, but I think it's important to think about where we are right now. China's our second largest trading partner. We've had real success in certain sectors, in the tourism, in the education sector, in the financial services sector. Those opportunities aren't changing. If you think about what just happened over the course of the last few weeks in Canada with the $40 billion announcement of investment in LNG Canada, that LNG is going to be going to Asian markets and significantly to China. So opportunity in the energy sector to a place that is using an awful lot of coal right now. If you think about, if you're a Chinese political leader and you've got 1.3 billion people, what's your first most important issue? It's food security. So, the agricultural sector is also critically important. So we've got opportunities in places where we can make really big advancements at the same time as we move forward on a broader agenda. So we're going to do both.
There's so much more I would love to ask you, but last question, just generally, in terms of
I thought you were going to come back to marijuana. No?
No.
Okay.
No, I'm over that. In terms of increasing competitiveness here in Canada, encouraging companies to invest, there's some hesitation at times in different sectors. There's also a bit of, I think, concern when you see regulatory delays, perhaps with pipeline projects, that sort of thing. How do you increase the confidence of companies in Canada to invest here at home?
Well, first of all, I think we have to acknowledge where we're at. So I talked about where we are economically right now. I have the position of getting to see actual corporate profits in this country because I see tax receipts. And let me tell you, we're doing very well. So the context is positive, but the anxieties are real. So I think you deal with them one by one. So we've dealt with a level of the trade anxieties in North America. We're trying to be helpful in the international trade anxieties. We hear from the oil and gas sector that access to markets is important. We took a pretty unprecedented step by buying the Trans Mountain Pipeline and the expansion opportunity, which was a pretty big decision. And it's still challenging, of course, but we think that if we do this the right way, we get to a much better position. Then we look at how do we deal with the things that are brought our way, like the U.S. tax changes, and we go after that systematically by making sure there's investment opportunities. And then we're going to need to think about the next issues. It's about trade diversification. It's about considering how we get more productivity. We have a highly educated workforce, but we haven't had as much productivity growth. So it'll be about how do we deal with the skills and training challenge. So You'll see me this fall thinking about how we deal with those competitiveness issues. You look towards our budget 2019, you'll see us talking about skills and training for the Canadian workforce. So that'll help people to make investments with confidence, I think, that they can do well in Canada.
Okay, that is all we have time for. Thank you so much.
Thank you. Thanks very much. Nice to be here.
Yeah. Thank you for that.